Hi, and welcome back. Summer is over. Labor Day is here, and Labor Day weekend marks one of the most predictable weekends in real estate market. But 2025 might surprise you compared to what we've seen the last couple of years. I'm Rick Bosley with the Bosley Team and Keller Williams. If you're thinking about buying or selling this fall, this episode today is going to give you some key tips to possibly save you thousands. Thanks for being here today. Some key talking points I want to look at. What we've done is we pulled up a 20-year historical trend. Now, if you've been listening to us for a while, you've heard us say that we're back to seasonality. So some classical September shift reasons or tactics that are happening, historical pattern. We do see a drop in September real estate because traditionally people who are moving to have a deadline around school, well, that's done. So the school, the surge, the summer, there's longer hours in the summertime. So people are looking at homes more often. That's when vacations are happening. So historically, September is when you actually see a pretty hard cliff of drop of activity. The back to school effect, the buyer behavior, the summer lookers are done. And then price dynamics, sellers become more realistic after the summer stagnation. During summer, because of seasonality, sellers are just doing their best out there. And if they don't get the house sold, then come September, they know that they're starting to decline. You'll see some pretty rapid price reductions. So what does this mean of what might make 2025 different? Well, let's look at some different mortgage rates. Mortgage rates will often tell you about the climate. Episode a couple weeks ago with Darian, we mentioned that with rates in 2025 were not historic low, we're an 18-month low. In fact, the same time last month, we were at almost 7.5 as the median mortgage rate. Now we're a little under 6.5, and we still are expecting that rate drop here in about 2 or 3 weeks in mid to late September. So we're seeing the drop there. Inventory reality, we have 21% more inventory than we had at the same time last year. So a full point, if not more than a point lower interest rate with more inventory. Truly, this might be some of the best buying conditions we've seen in 1 to 2 years. For sellers, time to get a reality check. The average days on market over the past to summer is approaching 70 days on the market, which means if you list your house today or this week, if you stay at that average, then you won't be selling until nearly the holiday season in that December market. So let's price it right, price it from the beginning, because that's where we're going to be there. So the 30 to 45 day rule says if we list your house in September, we need to price it correctly now to sell before October, because then there's this whole different lull that we get during the holidays. And it's historic, whether in the office or just in sales. The 5 weeks between Thanksgiving and Christmas, that's when the traditional homesteaded buyers and sellers slow down. And that's when the investors speed up. We see more cash deal percentages in December than we do any other month. Whether they're looking to get an extra write-off, or they have a 1031, or they need something, or they just know that's where the deals come and they're going to go there. The traditional market, so that's where it slows down a little bit, because people don't want to move during the holidays. The holidays are not the time they want to do it. So we really see a slow and a lull from November 15th to December 31st. And then all of a sudden, January 1, they come out again, right? And they rise, almost like they hibernate. Well, if that's the case, if we know that people kind of chill out and relax come November 15th, come Thanksgiving, well, that means if your house is on the market today, you want to get a contract in the next week or so you can close by October 31. So before we know it, the way real estate works, it's at least 60 to 90 days at a time. So the market mechanics, some seasonality, a lot of relocating professionals, job transfers will happen post Labor Day, and that's just data that we pulled. Empty nesters might be there. Kids are going off to college. The house changing. The house dynamics have changed. First-time home buyers, they got the tax refund. The summer they were building up, they were saving up, and now they're able to do it. When we look at seasonality, this is so much truth in homes that have a big school influence, and that's the summer sizzle. It's opposite for the homes that don't care about schools as much, the 55 plus communities. This could be vacation homes. This could be 55 plus communities. This could be the Villages or Margaritaville or spots out in Leesburg. This could be different areas. So realize that if you're a high retirement community, or if you're a high snowbird area, the season actually is inverted. Because when do want people come down? Well, it's when it starts getting cold again up in Minnesota, up in Chicago. Do they want to move away from that? Then they choose to come down, and they're looking and they're visiting in Florida. So all this advice I'm saying, and be careful because we might flip it on its head, that says unless you're in a vacation or a retirement area, then seasonality switches. So a lot of what we're talking about right now. That was a ramble. That was a ramble. Let's keep rolling out here. So for sellers, here's your advice right now, come Labor Day. Price aggressively right now. Do not chase the market through October. Listen to your agent. Listen to the data. Don't leave room for wiggle room, because wiggle room is gone, right? And buyers are going to do what they're going to do. And if you haven't gotten an offer, you need something, and you need an offer to negotiate versus leaving room to negotiate. So price it correctly right now. The rates are a good percent lower than they were last year. We are going to see it moving lower again if everything indicates there. The inventory is high. If rates drop and it takes away inventory, or if sellers stop, we don't know that will change. So let's get through the deadline. Let's price it right. Let's take advantage of what we know right now. For buyers, take advantage of that as well, right? Sellers are going, there's a lot of uncertainty. Make the offer. Make the offer that feels good. And if they say no, then move on to the next house, because someone will eventually say yes because of the inventory. We are seeing that buyer's market right now. And for investors, interesting fact here, and I'm looking at it, says only less than 1% of sales in July were distressed. So the majority of homes in July were not distressed. More should be coming. We're seeing a high percentage of distressed homes or list pendants or pre-foreclosure. Not to mean that they'll go to foreclosure, they'll go to short sale. Yet a lot of people who bought in 22, 23 and now need to sell, they don't have equity and they can't afford money to the table, but they still have to sell. So you're going to see some more distressed properties coming up. If you have questions about that, let us know. And then the rental market might change a little bit with students returning. January 1 becomes kind of a new rental market. So if people are looking to either sell their rental property or possibly purchase a rental property or just a rental surge. So the 90-day outlook, overall, it says September is the best buyer-seller balance. This is the balance, the equilibrium. It's when it moves from a seller's market in December, or at least a balanced, to possibly shifting over to buyer's market. October, it's going to be right on the other side of the rate change. So what impact will the rate change have? And then November, December, traditionally, we're going to see that slowdown from the holidays. Cash buyers kind of come out of hiding and look for those deals. And then come January 1, it goes again. I know I rattled a lot, but this is important perspective for you to have as you think about making your moves around real estate, and understanding that Labor Day in September, seasonality has a significant history. And you might not remember it because 2021, 2022, seasonality didn't matter because we were still post-COVID surge. The market was going nuts, inflation was going nuts, money was wildly inexpensive from an interest rate perspective. So we have to chalk those out of the way and go historically. September, you see a drop off in demand, you see a surplus in supply, and you see this summer cool down into the fall. So whether you're looking to buy or sell this fall, the next 30 days could define what it's going to look like for you over the next maybe 4 months, the rest of the year. Call us. We'll give you that kind of no hassle, no frills, just straight facts of what's happening right now. What does the market look like for you? When we're looking at this, we want to be a resource for you. We want to be the experts for you. We want to give you the data to give you the information to make informed decisions. And if it includes us, great. If it doesn't include us, but this helpful, then that's a win too. If you like this content, do me a favor and let the algorithm know you liked it. Go ahead and like or subscribe. Even better, drop a reply or send us an email. You can email me, rick@thebosleyteam.com, or you can call or text me at 407-815-2020. Thanks again for listening. Hope it helped, and hope you had a great summer and get ready for the cool weather. Finally, take care, everyone. Be well.